So hi Deepak sir.
Hi, Mani. Thanks for inviting me over.
Okay.
And
So we'll go like this, Deepak sir. Like we have collected a lot of questions from the audience. So I have in front of me. I have the list of questions with me. So before that, so everybody knows about UPI. Everybody knows about account aggregator right now, right? So we all know that it is changing the game of financial service like anything. So we would like to also want to know what the basics about Open. So when I go and approach people in the NBFC sector or banking sector, most of them are not aware of Open. So before getting to the basic questions, right? I would like to I want you to explain Open on a high level, and then we'll go on to the questions one by one. Is that okay, Deepak?
yeah, absolutely. Great.
Yeah.
Uh, so I think for those of you who are aware of Open and those who are probably hearing it for the first time, like Mani said, it's not something that has become as big as some of our other DPI initiatives in the country today. But then, like we all know, UPI started very small and then it just leapfrogged and Uh, so is now we are talking of ULI and Open started some time back, ONDCs and other networks. So I think a country like ours is building many digital public infrastructures of kind, uh, which is built more on the network framework. Uh, Even like what Open stands for, right? Open Credit Enablement Network. So Open is an open participative framework through which the whole lending ecosystem, that is the consumers who are small business MSMEs who demand or who need credit, providers who are typically the lenders, banks, NBFCs, financial institutions, market participants like platforms and the other ecosystem players where pool of customer transaction and the data resides. And then the set of other participants who are building kind of products, services, and utility on top of Open framework, they come together. So it's a framework which is orchestrating and creating a demand-led, cash flow-based lending model. We all know that traditional lending by banks and financial institution was always based on income statement, balance sheet, uh, designed for a long-term credit. So the whole credit origination, underwriting, managing of that whole loan book was built on pretty much a proprietary kind of a tool, which was about assessing all your financials, income, documents, tax returns, etc., etc., and then you took a call. We are realizing that in a country like ours, this helped definitely institutions who had a good long credit history, or those who were probably a tier one supplier to large manufacturers or listed companies. But access to credit was not available to micro and small enterprises primarily. A country like India, I think we are seeing it become data rich before its citizens could become financially or economically rich. Open is a way to ensure that your data becomes the way to get access to credit. The credit is not necessarily the long term credit or the substitute to traditional credit products,
Okay.
but these are largely built on cash flow, on demand, embedded across the ecosystem. And the participants are coming together to ensure that the whole cash flow based lending, on demand lending, the invoice and bill discounting against receivables uh, can fund the working capital cycle that typically is one of the challenge for MSMEs in this country. And I think Open is a framework to drive that for largely solving the need of underserved and unserved and creating a on-demand finance access through open platforms.
Okay, so this give a basic understanding about OCEN, Deepak sir, and let's get into the basics, right? So this is the framework, right? When you say framework, who are all the stakeholders available in that framework, Deepak sir?
So look at, obviously the customers are and the lenders are the two primary
Right.
players, but I think the larger part of this is the whole team that is putting it together, uh, from my spirit and people like Sagar, who leads Open initiative. So I think the set of folks who are helping set the whole Open protocol, Open 4.0, which was released about 8 months back. Uh, the other key important players of this are the participants who are building the ecosystem. So the GEM Sahai is where Open was used first. In fact, I
Okay.
was fortunate when I was at Kotak to be the first bank to have launched lending on GEM Sahai.
Okay.
Now we are seeing the phase one of GST Sahai, where PSU banks and institutions like SIDBI, they are coming on board. There are going to be more marketplace participants who are coming together, where you have data on supply chain financing. So it's a playbook where more and more players are coming with the use case. So either issuing a Kisan credit card, or supply chain for Jan Aushadhi Kendra, or probably building a revenue-based financing model. So one has to start seeing where is the demand and supply, and that's how this whole ecosystem of players are coming in and creating both access to data, customer, participants who are the lenders,
Right.
and the ecosystem, as I mentioned, Open
Okay.
4.0, and the full platform is supporting pretty much the
Right.
roadmap.
Okay, okay. So you mentioned a very important point that so you were the first one to implement OCEN in GEM Sagai platform, right? Can you just give a brief about your experience on that, Deepak? What how was it? How different than traditional way of doing it, and how OCEN was better when you were using it?
So I think, see, when Open started, and this was a journey that we started, I had started a couple of years back. So as I mentioned, being the first bank to go live and start disbursing loan, this was done on GEM Sahai. GEM Sahai typically has about 6,000 prominent vendors who supply to various government and public institutions, participate in
Okay.
all those tenders. So you have to start first, and I think our experience there was to see how you can build a very different tech stack, a credit decision engine, the collection mechanism, uh, because it's a both your understanding of the risk and the business model, and also about whether your technology stack is ready to support that. Uh,
Okay.
Also, because these are the real-time credit decisions you are taking, you're showing the offer, you should have ability to build and offer customer invoice financing almost at the real time. So this model needs to be thought through, and I think our learning was reasonably good because even though they were not very large in terms of volume or numbers, but I think getting to understand this framework and ensuring that all the credit onboarding, decisioning, collection, monitoring those portfolio gives comfort. And typically these are almost, I can't say zero risk, but relatively a very, very low risk business, because typical lending cycles are anywhere between 3 months to 6 months max. Ideally, it's about 3 months mostly. Ticket size was roughly in the range of between 6 lakhs and 15 lakhs. So I think one has to start seeing that, short-term credit demand, how can that be met, and how do you build your end-to-end operating model? And I think that's what we learned as we launched and learned through the process.
Okay, okay. See, assume that, see, this entire audience, what we have, I think close to 50 people are in this webinar, right? So the most of them are from a bank or an NBFC or a Fintech, which is an LSP, okay? So Deepak, this is what our audience is, right? So, one of the important question raised by the audience was, see, I'm going directly to these customers, right? The NBFCs who are giving, be it a supply chain finance or be it a short-term personal loan, I mean short-term business loan, small business loan for Kirana stores, all these are. So sorry, there was feedback which I got. So what I was saying is how different it's like going normally to the vendors or people who are in uh, direct to the customers versus getting customers through Gemsagai through OCEN. How does it different, Deepak?
See, direct to customer model will continue to work. I don't think this is in any way in conflict with whatever lenders have been doing on a traditional
Okay.
customer origination. But look at the kind of opportunity in India with the formalization of digital economy. Uh, all MSMEs today, they have a GST, they file GST, there is a digital payment acceptance and transaction for most of the payments. Uh, Finding those customers when they need credit for their business, the short-term credit, you cannot go and source through traditional models of sourcing. That will just not work. I strongly believe that embedded finance in a country like ours is here to not just start, but it will scale and scale significantly large. Uh, this itself could be $1 trillion opportunity. That is the kind of potential because of the simple arithmetic. If a country like ours even grows at 7.5% GDP growth year on year, the actual credit demand will go 3x of that. That is about 20 to 25% year on year. On top of it, the whole MSME segment with the Mudra Yojana and the way government is promoting the access to credit to MSME. I think there is a large push anyway from the government. So I think three things. One is the economy will continue to ensure the demand for credit goes. Formalization of overall economy and digital infrastructure and government thrust is ensuring that MSMEs, they do most of their business digitally. And as the growth of India's economy, job, employment is coming through MSME, even regulators want lenders to focus more on the credit to MSME rather than just build unsecured credit to retail customers. So the whole ecosystem is pushing towards the growth of MSME sector, towards the credit. And what kind of credits will grow? One is your traditional credit, which is led to your balance sheet and your income statement led. And that will grow. I'm not saying that's not going to grow. But the other part of credit, which so far was relatively untapped, uh, because of now the whole platform and the digital economy and the whole cash flow based lending solutions coming in. A lot of technology players are now building the new age LMS and collection systems to support for that. So I think this whole ecosystem is going to unlock a potential, and both models will coexist. You will see initially a slow, but then thereafter a major leap onto this whole credit which is getting built through the OCEN. And OCEN is just a framework. It's not some people have to build their products on top of it. And I think that's why I keep saying that once the ecosystem starts to move fast, then I think we see an exponential growth.
So I think that triggers the important question, Deepak. It's like, say for example, if I am an NBFC or a bank or I'm a cooperative bank, right? Whatever. So I'm a regulated entity. I want to step into OCEN. Okay. Can you just give me? These are all the important reasons every lender has to step into OCEN. Can you just tell me some important reasons for them to step in?
I think, see, at the end of it, if you look at a pretty much next to a secured business, I would say, because today you do know that like Threads platform, I think Threads typically
Right.
served your tier one vendors to the large manufacturer, but beyond that, Threads didn't go around. Uh,
Right.
so today, the whole data-led cash flow-based lending, you just do not have a strong alternate platform in this country. Uh,
Mm,
if you have to lend against a GST an invoice or a receivable from a supplier, how else will you provide them access to credit on a digital, seamless manner with a lower cost of origination, access to data in a seamless manner? So I think this is not about whether people will join in or not. I'm sure every single lender of any kind, be it a bank, NBFC, small finance bank, private sector, public sector, they all will come in. It's just that uh, whenever an initiative like this comes in, there are some who are early movers, then there are fence sitters, and then there are late
mhm.
starters. So you will see sequentially people coming in, and I'm
Right.
already seeing that there is interest of some of the leading institutions to be part of this. And I think as we start seeing, it's like a marketplace. If you have suppliers, demand comes in, and like vice versa. So you can't wait for a lot of demand to come and then banks come and say, okay, now we will join. Maybe it will be late because they'll have to learn the whole underwriting, risk assessment, monitoring, disbursement model, which is going to be different than what it has been on the traditional side. And
Mhm.
I think collectively today, with thanks to the ONDC creating a kind of a lot of large pool of seller data,
Right.
uh, ULI is making sure, and now we have public PCR, public credit registry.
Mm,
That's the other initiative that regulators are pushing and making it live. I think there is going to be a robust ecosystem, even from monitoring, fraud, risk prevention, ensuring that the duplicate invoices are not getting submitted. So I think this whole change in mindset, one has to be part of that early on. So I
okay.
keep saying that don't wait for when things are a little too big, and you'll probably miss, like banks missed the whole UPI wave. They thought there's
Mm,
no money in payment, and then they just sat out of UPI, and then some fintechs came and they just grabbed a large share.
mm.
Lending is core to financial institutions, and I think they need to be part of it to learn and see how to adjust their business model to stay relevant.
Okay. Okay. So,
The other
if I,
part, I'll just add, I think so. One is while we're talking Open, right? Uh, but think of it beyond Open. And that's why I keep saying that Open is a way through which you connect and use protocols for be it a product registry, a participant registry, the things that Open has built. But
mm,
same principle applies when you want to originate customer through any other platform, say Zomato. Do
mm,
we all agree that Zomato would know a lot more about a restaurant's business and insight than
right.
just getting access to the financial statements and data? Because every day, what kind of order, what kind of ticket size, what is the customer rating, returns, peak days, off peak days, inventory, online, offline, walk-in versus home delivery. Every single data point can be provided by, say, a Zomato or a Swiggy, which
Mm,
a lender will just not get access to that additional information. Now,
mm,
if you are only going to wait for the financial statements, you will only do a certain kind of business. Now, lenders have started to look at a POS and trying to see what kind of point of sale devices and the billing systems that these restaurants use. They get additional information. Now you integrate through third-party platforms like, say, a Zomato, you will probably get not just access to insights, but
mm,
also ability to provide them a working capital loan right there. So I think
mm.
once you start building your business model attuned to the Open, it's both adapting to the framework, building your business model and tech readiness, But it also unlocks a lot of other opportunity in the private marketplace, which either LSPs are going to put together or some platforms are trying to see how they create value out of their data and the pool of merchants or MSMEs that they cater to.
Yeah, I think this is a wonderful point, Deepak. I think, see here, when you say Zomato or be it any D2C brands, right, they have a huge customer base, and then embedded finance is going to embed any financial products for that matter, right? So here, so assume that I am a Zomato, I will go to Open and then I'll set up the architecture or framework there, and then I can connect to multiple lenders. Is the initiation will start from the D2C brands, or how that the flow goes, Deepak?
So every platform player, if they want, they can be an LSP or they can work with an LSP. They can bring offers from all these lenders who want to participate and are part of it. They can even build their own private network, but that's going to be more cumbersome. So to that extent, because that's not core business for them. So ideally, they will work with an LSP, a technology or a TS technology solution partner, who's just going to make sure that integration internally with their order management, billing system, because they also have to provide some additional data and insight or build their own scorecards and models. It's not equivalent to what a GEM Sahay is doing or a GST Sahay will do. Because here you are not underwriting a particular supplier side credit, because a restaurant would be paying for a lot of groceries and things where you may not be lending for those transaction or purchases. But what are you doing is you are providing them, say, access to credit, which is for refurbishment, for expansion, for so equipments. So things like those, which today, that's why I said this is not exactly an extension of Open as a framework, but for lenders, it's a way to understand how data can be used even in private network to create the pool of lending by understanding what are the cash flow, income, and other alternate data that comes through.
Okay. So, so why? I mean, this again a basic question has been asked by the survey, right? So, what is so we have a lot of infrastructure that has been built by iSpirit Foundation, right? Be it UPI, other now we, as you rightly said, we have ONDC, right? So everything has a purpose to it, right? If I want to send money just by a phone number, I think UPI is earlier to add a beneficiary and then get an OTP and then send it. That's a very cumbersome process. Then it facilitates, right? So and similar to other account aggregator, be it Fastech, whatever products that has been built by iSpirit or an NPCI, right? So what is the intent behind building this particular OCEN as a infrastructure, Deepak? Why it has been built?
So I think Open, as I mentioned in the beginning, Open has been built largely to support and grow the low ticket, short tenure or loan in a profitable manner. Because your cost of acquisition, collection is pretty high when you typically go into offline space. Thereby, lenders always insist on a certain ticket size and a tenure for a loan, because otherwise it's not viable for them to fund this kind of pool of demand for credit. So Open was focusing more on this need or a market gap of providing people a second to reduce cost overall of origination and underwriting. It had to build a common reusable framework through which all the participants can seamlessly integrate, and they do not have to go and invest pretty much into building all their pipes and integration across where the pools of demand are. So third is, every time, say, you launch a new product, how do you make sure that the product gets integrated seamlessly across network with all the participants where demand is coming? So I think framework makes it scalable, reusable. It can be used across the ecosystem. And thereby, once you have done an integration once, I think one can be part of a multiple loan network. So just think of this as a set of your network protocol that like you've joined internet now. You are connected to internet now. There are host of network through which we are able to do this call or probably when we browse, which is not visible to all of us. But then that's how some of those protocols run. Open is taking the pain away from connecting all those integration and the network. And they're saying that you can build products, you can create loans, you want to access the demand side. All you need to do is just integrate onto a platform, and then it takes you across. So I think this whole change in the way people used to think, okay, if I have to travel, I'll build my own pipe. Now you're saying that infrastructure runs as a service. You
Correct.
don't have to go and build your own independent infrastructure just because you have to participate. So I think so. It's like we all either I have a chartered aircraft or probably try a public carrier. We all use the same airport and the same runway.
Correct.
I think a network like physical network is what Open is trying to build for all the credit, so that everyone just comes and says, I don't need a separate runway of my own. I just want to use it for a certain use case, certain product, certain segment. I'm going to make that available here.
Okay. So if I understand rightly, instead of building on my own infrastructure to create products, get the origination and do the collection, disbursement, all these things, right? So rather, the iSpirit has created this token as an infrastructure play where the lender can step in and then get it done with their infrastructure. Am I right?
Yeah. So Open is basically it's a protocol, right? So like we said, it's when you so the protocol you can implement now in any setting where transactions are happening. So I think you just need to see where there are pools of transaction and just have those integrated in.
Okay. So you brought an important point that the cost will get reduced, right? So where do you think the cost is getting reduced? Because instead of I am doing it, build my own infrastructure, it takes some X amount of time by having a dev team and then deploying it. Or if I use my leveraging my existing architecture, they already provided. So you are talking about that development cost, or what are the costs being reduced, Deepak?
No, cost of customer origination, customer onboarding. I think finally you have to find customer today, right? Typically, your old traditional model, you will pay a DSA, DMA, sales guys, Google, Meta, anywhere your cost of customer acquisition will be around 2.5%, 200 bips. Now, that kind of a cost, still one could pay for a long-term loan that you're originating. But today, when you are part of a network, you are getting published, customers are discovering you, you are getting a demand from different participants. So your cost of identifying customer and onboarding customer comes down dramatically. And also the effort that it takes to integrate with different players where you would like to uh, be present. So I think so both cost of integration and the cost of discovery and customer onboarding or acquisition.
Okay. Cost of onboarding and customer acquisition. So if I understand rightly, if I'm a lender, if I want to increase my AUM or if you want to increase the number of customers, then I can step into Open and then be a part of the network. Is my understanding right?
Yeah, I think in my mind, every lender has to at some stage or other. It's just a question of how, when, what are you seeing in terms of data? How are you drawing comfort that whether GST data is good enough for a cash flow based lending. So it's not as much also about technology. Frankly, technology is an easier problem for lenders to solve. That's to integrate. I think the harder one is that they should have the right products and the risk and underwriting mindset to see whether cash flow based lending is something that they like to build and scale.
Okay. All right. And assume that after a couple of years, or I mean, even if you take now, there are 10, 15 lenders I can see in the Noken website, right? So if a borrower is coming to the platform, okay, and then I mean, we with this consent, we are getting his account aggregator details, financial statements, and all. And then now on the right hand side, there are list of lenders, right? So on what priority basis these lenders will be given to that particular borrower? Is there any selection mechanism behind that token platform is giving, or how's that?
No, so borrowers make a choice, and borrowers, they define what kind of customer transaction value, duration, rate of interest will they offer. So it's the power is in the hand of a borrower, not lenders.
Okay, okay.
And,
The
and,
borrower
and,
opt for that, is it
and
lender?
borrower will opt for it basis the amount or the tenure or the rate of interest, whatever are the terms.
Okay, okay.
If multiple borrowers want, or sorry, lenders want the same profile of customer, then borrower is in a good space to figure out. Otherwise, so I think that's what I said. It's a finally a demand supply matching for different pools of borrowers that lenders are comfortable lending to with their lending terms.
Okay, okay, okay. So any recent use case which has been developed, done and tested through Open platform, Deepak? I mean, other than what you did in Kotak, any recent players who have got benefit out of this particular platform, Deepak?
So I think recently, what I've gathered through the Open team, again, is Sagar is of course the best guy to talk more about it. But I think they have implemented Jan Aushadhi Kendra Kisan credit card in the states of Karnataka, UP, and Maharashtra. They've all leveraged the whole Open infrastructure to build it. I think also there's a set of players who are building and running the revenue-based financing stuff. So I think GST Sahay is again a use case which is reasonably tracking well. I think that will scale up in my mind where, like I mentioned, they're largely led by PSU banks who are at the forefront.
Okay, okay. We have got right now. I just give a break to the team. They keep listening to us. So we are going to conduct a poll now. So most of them are NBFCs, fintechs, and banks, right? So we are going to ask one particular poll. We'll take 1 minute or 2 minutes view. Vimla, can you just pop out the poll? So we'll wait for a minute. So we've asked a very basic question that would you like to implement OCEN in your company? There are a few people who are saying no. I don't know why they are saying no. Deepak, this raises a question, right? What challenges the lender has to implement OCEN in their company, right? So you have already implemented OCEN. You know what are the challenges, right? So if you can tell us what are those?
No, as I mentioned, it's not about technology. It's about the lender's priority for building and getting into the cash flow based lending business. If from your risk collection business model, you are not attuned to an opportunity like that, you will not participate. So I think it's absolutely fine. Like I mentioned, for anything, there are always early adopters, and then there are fence sitters, and then there are latecomers. So depending on who sits where in their, because for some of them, it may be that opportunity is not large as of now. So why to waste time getting into it today? Let me jump in when I already see market is matured enough. So I don't think there is a right or a wrong answer. But yeah, I mean, we always believe that for any of these, even if you get significant number of key players to start with, I think the momentum will shift and then others will join in.
Oh, okay. It is all about their choice, is it?
More than choice, it's largely about their understanding and their desire to build a
Mm.
cash flow based lending and be part of that opportunity.
Okay. And see, we all know in this particular ecosystem, we all know that lending is the collection business, right? Huh? So, what is your view on collections in this particular framework, Deepak? How does collection work here?
So again, since it's a framework, there are participants who are
Uh-huh.
building using the Open API, the whole collection as a service.
Mhm.
So either lenders can run their own collection, or even there are players who are building collection as a service and they offer it.
Okay.
Uh, so without naming the firm that has already built this,
Okay.
but they have built on top of some of the leading payment gateways. So
Okay.
which is a mix of both digital collection, escrow mechanism, and also in-person physical wherever uh, for any reason you are unable to collect it through escrow or digital. But
Okay.
those solutions exist even today, and that's been used by lenders who are on Open right now.
Mhm. Okay, got it. And when I was hearing your last webinar, you were explaining about this 5C framework, right? So before you launch any product, so maybe if you can explain to our audience, that will be a great help, Deepak.
So I think, see, for any lending business, it's important as the first, always I keep saying it's about the customers that you want to go after.
Okay.
Because depending on the customer, that's the first part of the course.
Mm,
Your whole model of either you go for co-origination, embedded finance, uh, your acquisition model, all that comes in, because that's so, like we spoke about some of your participants, if they are not keen to implement, quite possible that
mm,
maybe the customers or the segment that you are likely to get out of Open Network is not something they want to go after.
right.
Uh, so I think first be very clear on what are the pools of customers and what is a customer acquisition / co-origination strategy. The second is on your whole credit and underwriting process, because so credit underwriting, your BREs, whether you are comfortable doing a cash flow based lending, you
Mm,
have the kind of rules that are built in for that. So I think looking at your whole credit underwriting stack becomes a very important part of, which is the
mm,
second C.
mm, mm,
The third is your whole customer onboarding and customer experience journeys. So how are they designed? Is it full digital?
Physical.
There are handoffs. Uh, is it built multi-channel? Is it built for a co-sourcing? Uh,
Mm,
and then thereafter, how the customer, the rest of the experience remains.
mhm,
So I think that becomes an extremely important part of how you are designing the whole. The fourth is, of course, the whole compliance and risk piece, because whenever you are
mm,
undertaking any such
mm,
new initiative, I think it's important to understand all kind of possible risks that may come your way, apart from, of course, following
okay.
all the digital lending guidelines and the way regulators have prescribed
Right. Important thing.
this.
Yeah.
So, and I think the last but most important is the collections. So if you don't know how you will get your money back, it's better not to even get started. So I always keep saying that get your collection as a part of your core
Mm,
framework.
mm,
And I think at times the challenge for origination is the lack of innovation on collection side. And I keep saying that, if you can build better collection systems, we probably can unlock a lot of opportunities on the
mm,
lending.
mm. Okay, interesting. I think we've got a couple of questions. There are people who are sending me through WhatsApp also. So one question that I'm taking it because it's live, right? So that there are people who are asking there also. So Open, hey, hi Karthik, thanks for posting your question here. Open ULI and ONDC, right? What kind of varied use case they are? think everything looks very similar for them. I mean, maybe with your experience, you can just tell us, Deepak.
See, ONDC is very different beast, I would say, because obviously, as the name stands, it's again a framework built on backend protocol. So, which is again creating a demand and supply of marketplace for different products and services. Uh, but it will also include the demand and supply for financial products. So to that extent, yes, I mean, there are people who have said there is overlap, but point DC is you want to get a cab and you can find a cab or a flight ticket or a restaurant also on ONDC. But like some of us would have read, a couple of days back, they also did the first mutual fund transaction. So ONDC is becoming in many ways a place for all kind of financial, non-financial goods, service suppliers to come and be available for customers who want to take their products or services. Open as a platform obviously is not in any way barring that it's a framework which creates opportunity for different players to come together. ONDC is a marketplace. Open is not a marketplace. I think in a very simple term, if you want to compare the two, but Open obviously will be building more and more of the lending and credit related, and Open is only focused on credit as a service and ensuring that access to credit is built. ONDC will have many things like I mentioned, mutual fund, insurance, uh, and even your food, grocery, delivery, medicines, you name it. I think you mentioned ULI. ULI
Yes.
again is is a set of, I would say, information that today an account aggregator provides, or probably you go to banks they ping from bureau and they get from a third-party sources. Lenders will be able to plug in at a place and get a lot of information. It's not
Right.
it's not a lending marketplace. It's not a credit-enabled platform, but it's giving you a seamless access to a lot of information and a data that you may require for taking a credit decision. For example, you need land records. Now, your ULI will provide you access to that information if you have to provide a agri loan or you have to
Correct.
provide
Yes.
tomorrow loan against property or assets. So I think all of these, if you ask me, are all alongside this account aggregator also add to that. And PCR also add to it. So I'll just complete that, not just three, but the others. They all come together with maybe some overlap here and there, but largely they are complementary in nature. They collectively provide enough building blocks for lenders, for market makers who are the platform companies, those who are building the next gen cloud banking, loan management system to reimagine and see that how you can leverage a lot of these, say, collateral management, escrow, settlement. Now you have multiple building blocks sitting in one of these 4 or 5 stacks. The question is, how do you now reimagine and play? So I think all these are the foundational and enabling building blocks for us to reimagine and change the way credit is offered.
Interesting. And one more question from Anirudh. So he's saying that we have our own set of borrowers, right? How as an NBFC, how I can use Open for such borrowers? Is it really required, or it's, I mean, if they have their own set of customers, right? Would an NBFC needs to use Open? If yes, what kind of reasons could be that?
No, I think great question. So see, your customers, if they're coming to you every time when they need a credit, answer is no.
Okay.
But the reality is your customers don't come to you every time. And that's the fact for otherwise every bank could have done all asset products, even pre-approved customers, they don't go to them. So I think the benefit of being on Open is when your customers are looking for credit, uh, and if they see you there, then they will hopefully choose you over somebody else because your KYC and all those other onboarding is done, and thereby you can quickly onboard and then approve or underwrite if they are not pre-approved already by you. So to that extent, it does help. And because if the credit decisions are moving to the point of consumption for retail and at the point of transaction for SME, then you don't have a choice but to be there. So,
Okay.
so it's like a car loan business or a mortgage business. If decisions are taken at the dealership for a car as to which loan partner will you go with, it doesn't
Correct.
matter whether he's your customer. He's not coming to you. He's taking a decision there. So to that extent, I think one doesn't have a choice to be present at the point of decision making, even if they are your existing customers.
Okay, okay, interesting. And another this was the question being asked. Like I think a lot of people have asked the same question. I think in a different sentences. I just collate that. So I am an LSP. I am a D2C brand. Okay. So if I want to give financial products to my existing customers, I need to integrate with a lot of lenders, right? I need to say, for example, I have done my agreement with say 5 different banks. Okay, so I need to do the integration with Kotak, for example, second HDFC, SBI, whatever, right? So I need to do separate integrations with each banks. So will OCEN solve this problem, Deepak? Say as an LSP, I just put all my borrowers inside my OCEN platform. Let's say all the 5 lenders in the supply side. Will my integration cost will get reduced? How's that?
Absolutely, because that's precisely what the Open principles are, right? It's a framework. So once you integrate, you are part of that whole network. So these are all nodes. So if you are connected and through those nodes, you have now access to the larger network. So you don't have to do all those one-on-one integration.
Okay, okay. So every time I need to call their loan origination system, every time I need to call their loan management system, their core banking for deduping, right? So there are so many integrations are happening for an LSP to get inside a bank, right? So so you are saying that there is no need of that because if they come into
No,
that
not
particular...
for all kind of products. Again, as I mentioned, only this will serve a purpose for a cash flow based lending, right? So if you are still talking to bank for other products which are more structured in nature, those are not the APIs which are available through that.
Okay, okay. Only cash flow based.
Yeah. So right now this whole space is largely focused on the cash flow based lending. It's not replacing all kind of product and lending today.
Okay, okay. And one more question from Rahul Manoj, that he said that OCEN tech-wise is a game changer. We agree, but do you think it can solve the debt trap faced by MSMEs in India?
I need to understand this question better. Debt trap. Why would this be a debt trap? Because today, see, MSMEs, nobody is. See, these are not the loans given for buying a mobile phone and a washing machine, right? I mean, even the government today believes that it's important to give credit to MSME where the end use of money is for expanding and growing business and not for personal consumption. I think this is the perfect example that you are funding a certain kind of transaction. So you do know the end use of money. When you give just loan and you do not monitor end use of money, that can be more risky. Here, I know that if I have supplied goods worth 1 lakh to you and you said, okay, you'll pay me after 2 months, but I need working capital today. I'm getting that instead of say a 1 lakh rupee right now, I'm getting 99,000 rupee now, but that's okay because I mean, for me, I do not get access to credit, and unless I find this credit, I cannot
Right.
go and expand my business. So it's not a debt trap, because I think it's actually a money which is for a purpose. It's verifiable against a transaction. And then this is going back into reinvesting towards the growth of business.
Got it.
So I would rather say that this is a good credit, and where you have a transparent end use of that money, and you know where the money and for what kind of purpose is that credit being given.
Okay, okay, interesting. We'll take I think 3 more questions. So I mean, again, this normally if I want to underwrite a borrower, I have some traditional way of things, right? The data which is coming from the APIs, right, which is could be a bureau data, or it could be customer entered data, or a loan officer getting some data, right? So when a lender comes into OCEN as a framework, what are the data that is available other than bureau or account aggregator? Any other data, Deepak, for underwriting?
No, so largely here the whole idea is to only rely on whatever are the GST invoice data. I mean, the whole idea is if you still go back with your traditional underwriting, then this does not really serve the purpose. So typically you get to see what is the invoice, who's the buyer, who's the supplier, what is the duration of credit, and you look at purely the cash flow based lending model. Moment you start mixing it with the bank statement and bureau and all kind of data, then in many ways you're diluting it. Even though I know initially lenders will like to still overlay with some other existing sources of data that is part of credit decision. But eventually the success of this lies purely on scoring that transaction and whether the transaction is worth lending or not.
Got it, got it.
That's why I said it's a shift in a mindset more than anything else.
Okay, okay, okay. I think another interesting question which is asked by Vivek. So we were discussing about if I'm an LSP, I want to be a part of this network, right? I don't want to integrate for all these banks. And what about the approval of getting into these banks, right? Do I need, say, for example, if I'm an LSP, I have to put some kind of an agreement between these 5 banks, and then only I can just push my data to them, right? But if I be a part of OCEN, I don't need to do a tie-up with all these banks, is it? I can just put it over like as it is it? I don't need to do a separate agreement with each.
You will still need an agreement, because obviously there'll be a rev share and commercials and stuff like that. So some of those you will still build, because I think what you are doing is the network helps seamless flow of data, information, escrow, lien marking, payment, disbursement. So everything on the flow of a lending gets solved. But yeah, I mean, you still will have a certain commercials that you will have to be clear about.
Okay, okay. I'll just take this as the last question. So as on date, FIUs are only regulated entities like mutual funds, banks, pension funds. Can we expect unregulated entities also participate in future?
As FIUs, at least to best of my knowledge, I don't think that's going to happen anytime soon. In long term, none of us know, but in short term, very unlikely.
Okay, okay, got it, got it. So, I mean, with this final question, we'll end this session, Deepak. How do you see OCEN in the next 3-5 years?
I think OCEN is going through, I would say, a significant change in the way that's the whole OCEN framework is coming. Like they are building a whole centralized dispute management system that will help resolve dispute. They're also working on integration across multiple platforms. So the idea is that this becomes a protocol that widely sees that there are access points are provided. They're also in building stuff like what they call heartbeats and analytics. So That's largely to enable the data collection, which is while being totally data blind at the network level. So they're reducing the overall cost, regulatory cost.
Okay.
So I think the whole framework is going to be progressing well. The question obviously would be how quickly would it see adoption with leading players? And
Okay.
I think that's we can all take our own pot shot. But yeah, definitely when you're asking 5 years, I would say 5 years is a long time, but I do see that it will become a significant player in terms of